Have you ever wondered where to put your money as a form of investment, but felt overwhelmed by the number of options available in the market? If that is you, I'm addressing you today, so make sure you watch this video up to the end. Many people often hear about money market funds, Saccos, and shares, but they do not know which one makes sense for their situation and therefore don't know which one to go for at a particular time. And that's why today I'm making this video to give you a simple way to look at it so that you can decide which one to start with among the money market fund, Saccos, and shares. If you're new here, welcome. This is Build Your Wealth Hub, where we normalize talking about money. We break down investments. We also change our money mindsets. And most importantly, we also offer personal and business coaching. So if you need all those services, check out our website on all social media platforms and see what suits your need at this time. Also, subscribe to our YouTube channel for free videos on how to build wealth the smart way. And if you are returning, thank you so much. So let's dive into the video. Let us start with money market fund as the first investment. I always say I consider this as the first option if you are new to the investment market. Money market funds are designed in a way to help your money grow instead of losing their value to inflation. So it is best for someone who is trying to build an emergency fund or saving for short-term goals. So we are going to describe them so that if they suit your situation, you can go for it, because we know that personal finance is personal to everyone. Therefore, we are not going to say everyone should go for money market fund or everyone should go for this and this investment. No, we are going to describe all of them, and if it suits your situation, you can go for it. So I always like seeing money market fund as this avenue that gives you a platform where your money grows when you do not need to use it. So one characteristic with money market funds is your money remains relatively accessible. You can access your money anytime, just the same way as in a regular bank account, while it is earning you some money at the same time, which a regular bank account cannot do. Another thing, the risk is considered low than investing in shares, for example. So a money market fund is not designed to make you rich overnight. Okay, guys, a money market fund will not make you rich overnight, but it will grow your savings while keeping them accessible to you at any time. Let's get that clear. It is not meant to make you rich, but to preserve your capital and at least to give you some growth compared to just leaving them in a regular account. The second investment option is a Sacco, and it is considered a good option if you are looking for long-term wealth building investment and you want access to affordable loans in the future. And the benefits of investing in a Sacco are like it encourages disciplined savings. There is also a potential of earning dividends from a Sacco. You can also earn interest on your savings, and the most important is you can access loans at a lower rate, which most people really value that one with Saccos, right? So if you have a stable income and you want to build wealth steadily, a Sacco can be an important tool for you as an investor. The third investment is shares, and shares gives you access to companies. You become an owner of a company when you own a share, a part owner of a company. So when companies grow, you benefit from increase in your share price and dividend payment from the companies. Shares have the potential for long-term higher returns, but the prices can go up and down. So shares are best for long-term wealth building, and that's why it's suitable for money that you do not need immediately. So don't go and put your rent money for next month in the share market thinking that by next month you will get your money. No, it is best for long-term money that you do not intend to use in the nearest future, but money that you are willing to leave it and let it grow. So remember, our question was, which one should you start with? We have not forgotten that, and we are going to answer the question. So for beginners, start with money market fund and build your emergency fund in a money market fund. 3 to 6 months or 9 months of your emergency fund is important before you venture in other riskier investments. The second thing is you can consider joining a Sacco if it aligns with your goals and if you can save consistently. This I say because if you do not intend to borrowing affordable loans from a Sacco, then you don't really need to join a Sacco. But if it aligns with your goals that you want to borrow loans, you can consider saving in a Sacco and get affordable loans. And then the third thing is you can start investing in shares when you have your savings in place, your emergency fund, and you have money that is flowing. And you can also invest in the shares with a long-term mindset. You need to give it time because it operates with the power of compounding effect. Our takeaway today is the best investment isn't always the one with the highest returns. Sio ile enye iko na sijui return iko juu. It is the one that matches your goals as an individual. It matches your mindset and will enable you to stay invested over a long period of time. We don't want to go for an investment and then 2 weeks later you want to liquidate it because there is an urgent need and you end up going for unnecessary losses because the investment has not yet materialized. Yeah. So I want you to tell me in the comment section, if you had 10,000 Kenyan shillings today and you wanted to invest, would you go for money market fund, shares, or a Sacco? And tell us why. Thank you for watching up to this far. Please subscribe if you haven't done so. It is totally free. And I will see you in the next video. Bye.